Welcome to week 8 of auditing class 301. And today we take up our final lesson in chapter 11, error and fraud. The material is presented on pages 115 to 126 in two sections. Key concepts in this lesson are physical controls and segregation of duties. And we will also read about the duties of the internal auditor. Errors are unintentional mistakes or omissions. Mistakes include misapplication of accounting principles or misinterpretation of the facts. Fraud takes two forms. The first is fraudulent reporting, which is deliberate and intentional falsification, alteration, or misstatement of the accounting records. The second is called defalcation, which is described as theft, embezzlement, or misappropriation of assets. In other words, stealing. One's lying, one's stealing. Fraud requires three conditions to occur. Reason, we need a reason for the fraud, a reason for the theft or embezzlement or misreporting. Opportunity, number two, you have to have the opportunity to actually take control of assets or records. And finally, rationalization. That is, those committing fraud know what they're doing, that's why they hide it. And they have to have a rationale. In other words, it's okay for me to do this because, and then the reason is always false, but it's there, it's present. That's how people justify doing bad things. The auditor's job is to prevent fraud, not to detect it. Note that. However, when detected, it must be reported. Management's responsibility is to both prevent and detect fraudulent activities. You see, their responsibility is much more significant than that of the auditor. The auditor does assess the risk of both error and fraud. The object of testing is to minimize that risk. The hardest type of fraud to detect is understatement or not recording a transaction, since there generally is no starting point for this activity from which to trace it. Generally, any indication of fraud should be discussed with the employee's manager and with the audit committee. Disclosures to the information users include departures from generally accepted accounting procedures and scope limitations when the auditor is prevented from obtaining conclusive evidence of error and fraud. That needs to be reported in all cases. If the client refuses to correct GAAP departures, it should be reported with a qualified or even an adverse opinion. The same is true for scope limitations. If I'm prevented from doing further research when I have a suspicion, that itself is suspicious, needs to be reported. Ordinarily, disclosure of fraud beyond senior management and the audit committee is not a part of the auditor's responsibility, unless there exist legal requirements or a subpoena has been issued, or to a funding agency that receives government assistance. In these cases, the auditor is required to take further steps. If the client does not correct material fraud when it's pointed out, the auditor should consider withdrawing from the engagement. In 1995, Private Securities Litigation Reform Act, passed by the Congress, imposed some significant requirements on the auditor. You can read about these on page 117. Specific audit procedures for risk of error and fraud include brainstorming sessions among the audit team. A brainstorming session when we say, where might we encounter fraud, or where would we expect to if it in fact exists? Second, emphasis on professional skepticism. We come in neither expecting nor denying that management could be guilty of omissions, errors, frauds, etc. And any specialist who is retained in regard to the audit should be also included in these discussions. The information used to detect errors and fraud include discussion with management, which is presented on page 118, and or finding surprising results from the analytical procedures used in gathering the data and evidence. If we're surprised by the results of that, we must, and a matter of professional skepticism, suspect error or fraud and investigate further. Two risks are always present, and these are the improper revenue recognition and management override of controls. Either of these is sufficient to present substantial suspicion. Page 121 gives specific responses to increased risk of error or the perception of increased risk of error or fraud. These include 4 types of response. Number 1, overall responses. Number 2, general types of responses. Number 3, response to a specific risk. And number 4, response to management override of control. Each of these gives detailed instruction to the auditor on how to proceed. Again, page 121 will expand on this topic. When the auditor evaluates the audit evidence, 2 results suggestive of fraud are these: discrepancies in the accounting records and conflicting or missing documents. All such indications should be discussed and documented properly. So you write down what you found and you talk it over with the team and the audit committee, naturally. Part 2 of the chapter covers illegal acts. These are first defined, and then the auditor's responsibility, when they are present, is given. Generally speaking, the auditor is not competent to judge legality or pass legal judgments. This is the work of the attorney. The auditor does have specific duties to discuss and report evidence of potentially illegal acts, but not to decide whether those acts are in fact illegal. 2 pages of questions follow the presentation of Chapter 11. Read them for your test preparation. Note that the final exam is 10 questions instead of the usual 5. Looks like everyone is doing quite well. I point out as we reach the end of the first course, 8-week course in auditing, that there will follow 2 more courses, one in the next 8 weeks and another in the spring semester, Auditing 2 and Auditing 3. We'll continue to follow the format and the textbook that we already have, and in doing so, we should have covered by the end of the next 16 weeks the entire topic, at least from the point of view of those preparing to take the auditing exam. Hope you're enjoying this as much as I am. Probably not. Probably you're doing a lot of work. I'm doing a lot of work, but I'm having fun with this class, learning things that are quite interesting and entertaining from the point of view of one who worked with auditors but never been one. And so we'll continue on. Good luck on your test. Don't forget to get all of your assignments completed and in before the end of the week, because I will be submitting grades as of next Friday. So see you at today's class. Bye-bye.